Well, would you look at that? Who would have thought that the market would turn around when deals were starting to be made on tariffs? Hmm. Today's video, we're talking a little bit about the tariffs and the former Chrysler and Home Depot CEO getting on Fox News and talking about it, which would have been yesterday, day before yesterday is when this interview happened. Um, and then we get into what's going on with the markets today. But before I roll that intro, look at this. That is right now today, the markets. Now, even though the market has turned around by over 1,300 points today, and part of that is because of South Korea, Israel doing a verbal deal already with the president, and the comments that Netanyahu made yesterday as one of the first allies or first countries to remove trading barriers and eliminate tariffs towards the United States. It looks like the tariff program, or what the president is putting forward, is gaining some results. You don't say. Wow. Now let's roll the intro. What is up, guys? Welcome on back to TK's Garage. And in this first clip, I want to show you we see the former Home Depot CEO and Chrysler as well talking about not panicking. And I think it went towards stuff that the president said online yesterday. Don't be a panicking. Don't be one of the weak ones that panics. And as I said, what, day before yesterday, maybe it was 3 days ago, that there was an awesome buying opportunity right now in the market to buy low. I'll give you an example. When COVID hit, all right, I almost tripled my net worth in a year. And that was Bitcoin was at like 3,500 a coin, somewhere around there. It got down under 4,000. Okay. I bought a lot of crypto. I bought a lot of Tesla stock, and this is before I didn't have one. I wasn't driving one at the time. I just saw great value in a lot of stocks. And same thing with Apple, Google. I don't know if it was already split in Alphabet yet, but I bought a bunch of blue chip stocks because everything was down, and Bitcoin. And needless to say, as we came out of the pandemic, as we were getting into 2021, going into 2022, all of this stuff just kept going up. And before the end of 2022, my initial investments, well, I also sold Bitcoin a lot throughout that time. But think about this: buying 10 Bitcoins or whatever at the time, plus my other investments. So like 30 something thousand in investment in Bitcoin. Even right now it was up over 100,000, but think about that. A $3,000 investment returned a $74,000 return basically today in 2 years, 3 years. That's insane. All right. So this is the same type of thing. You saw the massive downturn on the market when the economy got shut down because of the 14-day BS, right? So boom, markets crash, markets start to come back up. Same thing here. This didn't crash as much, but you can already see it. And it's so much quicker on the turnaround with the deals and stuff being announced and all of these countries calling to negotiate. I think the other side now is going, oh crap, we played this wrong. Because a lot of the key figures that you would normally hear that would be against the president or screaming from the top of their lungs or doing dance videos are quiet right now because they don't want to look like a fool like they've done multiple times in the last 90 days. But without further ado, let me roll this interview.
All right, so where this all goes next, the debate over tariffs is lighting up, obviously, at this hour. Former Home Depot and Chrysler CEO Bob Nardelli is here, and host of Fox Business Making Money, Charles Payne, is here as well. Great to have you both. Bob, I want to start with you first, because I know you're a fan of leveling the playing field. You've suggested that tariffs are not a bad thing. However, in this moment of great uncertainty, what do you tell folks who are saying, all right, is this the right strategy? I mean, the markets around the world have taken a pretty significant hit. Is the White House on the right track, or should it recalibrate?
Yeah. Well, thank you for having me. As I mentioned many times, I think we've become a society of instant gratification. When we saw the early tariffs go on Mexico and Canada, and as a result, we saw border closings, we saw repatriation of the criminals and illegal aliens that came in here. People were very, very happy about that. Now, Sandra, here we see another move by this president to really try to level the playing field, to your point, and we're seeing an overreaction, in my opinion. The Secretary of Treasury said it, I'm saying it, that we should just stand down. And we're going to see these ups and downs, these goes ins and goes outs. But I, for example, personally have not sold a share. And I'm staying in this market because I believe what he's doing over the long haul will benefit our country in a number of ways, Not only balancing the tariffs, but he's also focused on balancing the dollars of trade, which is also very important for this economy going forward.
But at some point, Bob, there will be real-world consequences. And Charles, you and I have had a lot of conversations about this, and you can only sort of weather this, strategy for so long while markets continue to take a hit, inflation possibly goes up, and then you're looking at the possibility, as the street is writing up, JP Morgan and others are predicting a 60% chance of a recession and a couple quarters of negative economic growth. Are you concerned that this could push us into a recession until we get there?
No, I tend to agree with Bob. Here's the thing. What we're not talking about is oil was $76, now it's $65. Gasoline prices are going to plummet. Any other time, that would be the #1 story. In fact, if you go to the polls, what will get you elected as president? Much cheaper gasoline or Wall Street crying? I'm just being honest about it, right? So, yeah, people have these stocks in their 401ks. And guess what? We've been through it. There's a correction on average every year. There's a bear market every couple of years. I think most people are accustomed to that. But to Bob's point, it's lower interest rates, mortgages coming down, those kind of things. We talked about this year being a real challenge for small businesses to redo their debt. The so-called maturity wall, $9.2 trillion in debt was due this year to be rebalanced. And at levels that we came into in January with the 10-year to 5-year yield, many people were marking some of these businesses to go out of business.
So in your view, are you saying this is going perfectly, Charles?
There's no such thing as perfect. But I will say this. Think about what President Trump did in his first term in office. What was one of his first acts? He dropped Moab, the mother of all bombs. No president ever dared to drop the biggest non-nuclear bomb ever against our adversary. And guess what? He did it. We should have been expecting. I wasn't expecting the formula that they used. Okay. But thinking about it, Sandra, this is what he did before to fight something that he thought was worth fighting.
All right. So, Bob, obviously a big question would be, if this is the calculated risk that we've heard his team say it is, did they factor in the drop in global markets that we have seen and the possibility of inflation spiking and the possibility of a drop in economic growth? Those are obviously haven't happened, but there are possibilities and probabilities in the case of some Wall Street banks. Bill Ackman wrote this. He says we're heading to an economic nuclear winter. He got a lot of headlines and attention for this. The president has an opportunity to call a timeout and have the time to execute on fixing an unfair tariff system. Alternately, we are heading for a self-induced economic nuclear winter, and we should start hunkering down, make cooler heads prevail. Here's another voice in here. This is Jamie Dimon in a letter to shareholders today. As for the short term, we're likely to see inflationary outcomes, not only on imported goods, but on domestic prices as input costs rise and demand increases on domestic products. Whether or not the menu of tariffs causes a recession remains in question, but it will slow down growth.
Can I point out the contradictions right there? Yeah. Prices aren't going to go up and demand is not going to go up at the same time. Everyone talks about Smoot-Hawley. That was the greatest deflationary period of all time. Scott Bessent said from day one, as part of the architect of this, that he doesn't see recession. And by the way, I think the inflation thing is way overblown. The economy is going to slow. That's where the risk is. I don't think there's inflationary risk at all.
Bob?
Yeah. Yeah, a couple of points. Number one, we have to stop letting Wall Street determine our business. Every 90 days, the satellite passes over and they take a vote. And when they don't like you and they vote against you, then you get the activists coming in trying to tell you how to run your business. The one thing I saw the other day when the Doge panel was being interviewed, what really set them apart? These are all business leaders, right? Who have to deal with these decisions every day, every month, every week, and every year when they're doing budgets. So listen, I think Charles is right. We're on the right path. Jamie Dimon's a dear friend of mine. He's always been half full. I just saw his podcast where he talked about introducing his annual letter. And again, he came across very positive. It was not doom and gloom when he was on that podcast. He was talking about all the good things that, certainly JP Morgan's doing, what he sees in the country.
Okay.
Yes, I think the administration knew there was a risk, but it's a risk worth taking for the long haul.
But Charles, just a real quick final thought. I mean, you can't ignore that there is great uncertainty. And even if you support the tariffs and you think this is going the right direction, that short-term pain can turn into longer-term pain if this doesn't come to fruition fast. I mean, would you be in favor of this 90-day pause that Ackman is talking about?
No, it's the ultimate sign of weakness. No. Right now, that's the so-called Trump put. Now, let me tell you, listen to what Trump has said. Trump has said it's going to be short-term pain. He equated it to post-operation having a surgery. And then he said, we take our medicine. Those are all short-term things. Think about it. They're working on this. They're going to get this done. The last thing you want to do is a 90-day pause. It weakens his hands dramatically. He's got to stay the course. 50 countries are trying to negotiate, and let's get it done.
It's going to be tough to commit capital in this environment.
So don't commit
I'll say
it.
that.
Don't commit it.
Yeah.
It's going to get
Cheryl,
interesting.
you and I lived through this.
Real quick, Bob.
You and I lived through this at Chrysler when the markets melted down.
Yeah.
And you and I saw inflation go. I predicted 10. It got to 9.1. So we've been through this before. The certainty of uncertainty shakes those individuals who haven't been through this before and don't understand a steady hand. Just as Charles said, it would be a huge sign of weakness to back off at this point. He has to see it through.
So we're going to continue this debate. We've got Robert Wolf, who is hugely critical of where this is all going, a former Obama economist, and also Steve Moore, a former Trump economist. So we'll continue the debate. Gentlemen, thank you very much. I appreciate the conversation.
So as you can see, it's basically hold firm. What the president is doing is working. It's going to bring more money, grow the economy here into the United States, and it's huge. And why this matters for me on this channel is it's huge for the auto sector. I mean, yeah, there's 900 temporary layoffs right now because Windsor is closed and they do stamping and some other stuff that supports the stuff across the river. But just as we've already seen, Chevrolet or General Motors, moving a lot more production to the Indiana plant because they don't want to pay those tariffs for stuff coming in from Mexico or Canada. They're doing more work here in the United States, building more cars and trucks here in the United States, which is going to pay more wages and cause them to hire more people here in the United States and not Mexico or Canada. What I found interesting was also this morning, right? So, I showed you the stuff at the market early this morning, or right before shooting this video, I took that screenshot. But Fox and Friends, so that interview I showed you a minute ago was like a day and a half ago, right? This is right now, today, from Fox and Friends. And there's actually some live testimony. I have a feed that's being DVR'd right now from William Greer as he's speaking to Congress right now about what's going on with the tariffs, and their oversight committees basically saying, hey, what's the situation here? Are we seeing any results from this? And then I'll get to that maybe in a separate video, or maybe we'll throw it in here. But without further ado, let me run this other thing from Fox and Friends from this morning. And it's pretty telling.
Let's talk about your money and trade, and the trade battle between the United States and China is ramping up, with Beijing promising to, quote, fight to the end, whatever that means.
Meanwhile, dozens of other countries have already reached out to the Trump administration to begin the trade negotiations as the president orders talks now with Japan.
Well, which is good news. The markets seem to like that. Peter Doocy joins us from the White House. Peter.
Yes, about a third of all countries on the planet that are dealing with, at a minimum, this new 10% baseline tariff are calling folks in the West Wing here asking for the way down.
Tell you that there are 50, 60, maybe almost 70 countries now who have approached us. So it's going to be a busy April, May, maybe into June. President Trump is going to be personally involved in these negotiations, and he believes, as many of us do, that there's been an unfair playing field, so the negotiations are going to be tough.
Well, nobody tougher than China, where officials are warning today the U.S. threat to escalate tariffs on China is a mistake on top of a mistake, and once again exposes the blackmailing nature of the U.S. China will never accept this. If the U.S. insists on its own way, China will fight to the end. And this is what Beijing is worried about. So there's the possible tariff announced Monday, 50%. You add that to the reciprocal tariff announced last week, 34%. Add that to the tariff over fentanyl trafficking that was announced in February, that's 20%. You get to 104% tariff on Chinese goods. That's as the Israelis came here yesterday to show that Trump is willing to work with friendlies on trade this way.
We will eliminate the trade deficit with the United States. We intend to do it very quickly. We think it's the right thing to do. And we're going to also eliminate trade barriers, a variety of trade barriers that have been put up unnecessarily. And I think Israel can serve as a model for many countries who ought to do the same.
And so Israel came all the way to the White House. Bibi Netanyahu came all the way to the White House yesterday to talk about being a model for other countries, not to announce some kind of a grand bargain. President Trump is still dug in on these Liberation Day tariffs, and we expect to hear a full defense of that from the trade representative, Jamieson Greer, testifying before the Senate Finance Committee at 10 a.m. today. So stay tuned for that.
So, Peter, did Netanyahu leave without a deal? Did he have a verbal agreement, a handshake agreement? Do you sense that they came to some type of, some type of
big, beautiful deal?
Yeah. I mean, is there anything done?
It seems like it's more of a gentleman's agreement. As soon as there is something that they can put out that would show other countries, in fact, this is the model, this is the way, we will take the tariffs down, we would expect to hear about that right away, because President Trump has been telling us stuff with very little delay for the last 3 months, basically right away. But that is not what happened yesterday. Some kind of a gentleman's agreement, hold on a little bit longer, friend, and we'll see you next time.
Yeah. So, Peter, one of the reasons the market has been selling off like crazy, although today it looks like we're going to have a good day to start, is the president's men and women have not all been on the same page. Some are talking about permanent tariffs, which means forever, as long as this administration has a say to it, or it's just a starting point for a negotiation. And we just heard in that soundbite you played with the Treasury Secretary, Scott Bessent, he was talking about, it could be a very busy April and May. So it sounds like that's the runway. They're giving the president or at least the president is targeting until June to get it all, everybody whipped into order.
Yes, and if you look at what President Trump has been saying, there won't be a need for these reciprocal tariffs if more stuff, more valuable stuff is being produced in the United States. And so once there are commitments to start doing that from big companies, we would expect that to be part of the deal to get the tariffs down or gone.
All right.
All right. Well, Peter, we added a new word to our vocabulary, panicking. He said, don't be weak, don't be stupid, don't be a panicking, which is a new party based on weak and stupid people. He says to be strong, courageous, and be patient.
You take panic, and then you add
an N.
All right.
Panicking.
And Peter never panicins. So
that's Peter panicking.
Yep.
Only pelicans panicking.
That's what we hear. And don't bring up penguins. All right. Thanks so much, Peter.
So, like I said, there you have it. We'll close out with the clip from William Greer, I'm already looking at some of this as it's happening in real time live. And I'm just like, you can tell the change of tone from both sides. The chairman, obviously a Republican, asking him relevant questions about what's going on because they want to have actual answers about what's going on with tariffs and are we seeing any actual benefit from these tariffs? And then seeing the other side just complain about hyperbole and oh, everyone's 401ks are down. But I love the clap back where they were like, well, the market's up 1,500 points today. I love intelligent people that are able to clap back and hit people with facts where they go, and they have no response. It warms my heart. But what do you? I know a lot of you guys that watch this channel are auto workers. I know I have a lot of people that work for Stellantis and General Motors that work in the plants. Evidently, Detroit is now my highest watched city. So I know a lot of you guys actually work in the auto sector. And I want to know what you guys honestly feel about the tariffs. Like, everybody's not an economist. I'm sure people are like, I'm slightly retarded when it comes to like this stuff. Like I over obsess and learn about things when it's stuff I want to get into, especially with stuff about making money. So I've been doing stuff with the stock market for like 15 years, right? Since I was 19, I was like, oh, and I'm trying to figure out how to do everything: day trade, option trade, just. I understand that a lot of you guys may not do that. So while I understand like how some of this stuff is working and why I am optimistic about the stuff that I'm seeing, I want to know how you guys feel that maybe don't understand how this works. Are you excited for it? Are the other people, like other union members that you talk to on a daily basis or other workers that you talk to on a daily basis, excited about what's going on here? Let me know what you guys think in the comment section down below. I will have some people, I know people are going to ask me about the emissions stuff today. Well, I'm waiting to see if Congress is even going to do anything, at least on the House side. I'm looking at the schedule and I'm beyond aggravated, but that's a separate video. Let me know what you guys think in the comments below. Thank you very much for watching. And as always, stay petty, my friends.
Well, thank you. And as you indicated in your testimony, you've been approached, the administration or you have been approached by about 50 other countries already. I assume that the objective in these approaches, and I assume that there will be discussions and negotiations with them, but first, could you verify that? Is the objective here to engage in market access negotiations with these countries?
Chairman, as these countries approach us, the idea is that we've had years and years of non-reciprocal access, and it's contributed to these trade deficits. As the countries come to approach us, what we've told them is, if you have a better idea to achieve reciprocity and to get our trade deficit down, we want to talk to you. We want to negotiate with you. And it goes both ways. Sometimes they have exports to us that are driven by subsidies and unfair trading practices. And then obviously they have non-reciprocal treatment on their end where they block our exports, sometimes through prohibitive tariffs, quotas that are not administered in the appropriate way, or other unfair trading practices. So these are the kinds of things that should be targeted. And I don't want to prejudge the negotiations, but if they're able to provide an alternative plan that can further these objectives, I think we're open to that.
Well, thank you. The America First Trade Policy Memorandum rightly tasked the USTR to review China's compliance with the Phase 1 agreement. Under the agreement, China is obligated to purchase more U.S. goods and change basic practices and laws, the so-called structural commitments. The prior administration refused to discuss whether China complied with its structural commitments. And by the way, these were commitments made in response to tariffs in President Trump's first presidency, correct?
That's right.
What is your analysis of China's compliance with the structural commitments that it made in Phase 1 so far?
Our assessment, Chairman, is that in the initial stages of implementing the agreement, China made significant movement to make these structural changes, whether it was with respect to agricultural rules, financial services, or IP. We found during the Biden administration there was little enforcement and little communication, and that the Chinese did not comply with this agreement in large part. I've had a call with my counterpart. I've communicated to him our feeling on this, that they have not complied with the agreement, and I think we're disappointed by this. It's not surprising, but we are certainly disappointed by that.
And now you're engaged to, again, see if we can get compliance.
We will see, right? The Chinese obviously have agency in this. It's not just a matter of U.S. policy. We, of course, welcome and we hope that foreign countries will change their practices to make sure that they're fair, and we look forward to continuing to monitor that situation.
Thank you. The administration has announced it's negotiating an agreement also with India, and it appears already to be yielding results, such as India dropping its digital services tax. Although India has high tariffs, its non-tariff barriers are just as significant, if not more so. Will you try to include commitments on matters such as intellectual property, technical barriers to trade, and science-based agricultural rules to take on those barriers?
Yes, and I have a standing call with my Indian counterpart to address these very issues.
All right, thank you, Senator.